Hello, here's what's moving the markets. Trade tensions continue to rise as Trump arrives in the UK, and central banks will be in focus. Okay, let's break down the developing news. First, let's cover last week, which was relatively quiet on the economic data front, and many of the major FX pairs traded sideways. However, Trump's actions did lead to an increase in volatility, as at the end of the week he had announced the US will introduce tariffs on Mexico imported goods, which could range from 5 to 25%. In addition to this, the aftermath of the EU elections left markets slightly confused when it came to the euro, which remained slightly positive. Central bank activity was minimal, with the Bank of Canada interest rate decision was a complete non-event. Commodity currencies showed weakness across the board as the price of oil plunged lower. The Aussie, Kiwi, CAD and the Norwegian kroner were negative. The yen and the Swiss franc were firmer and retained its correlation with risk as equities faltered. The S&P 500 and most major equity indexes moved lower for another week due to risk sentiment. Cryptocurrencies continued their climb higher as a risk-off scenario, with Bitcoin reaching a high above the $9,000 handle, and with a year-to-date gain of 120% and now only down 53% from all-time highs. So the continued global economic uncertainty sent investors looking for security in bonds. Short-term rates moved lower to a level of inversion that was previously experienced during the financial crisis. An inverted yield curve is viewed as a signal that a recession could take place, but bond investors may not always be right, as certain macro data have held firm, such as the US GDP still showing a 3.1% growth. As the new trading week begins, the open will be light liquidity due to New Zealand bank holiday. The main action will start taking place during the European session. The first trading week of the month brings important central bank meetings and macro data releases for the prior month. Regarding central bank meetings, the first to meet during Tuesday's Asian session is the RBA, who are likely and expected to lower its interest rates from 1.5% to 1.25%. The second is the ECB meeting, where traders will gauge their views from the EU elections and its impact to the central bank's approach. In terms of data-wise, the main one will be NFP on Friday, in addition to UK PMI surveys, should shed some light on the economy as we head towards the Brexit deadline. Also, the main focus has been the ongoing geopolitical developments such as Brexit and who will the next PM be in the UK, and trade war tensions heightened not only with US-China, but now Trump puts tariffs on Mexico. On the corporate front, keep an eye out for tech updates from AO World and Salesforce. The earnings season has almost come to an end, and it is less likely equity announcements will play a significant role. Thank you for listening, and I will see you in the next Traders Report.